All right, everybody. This is October 2020 monthly market update. You guys can find past reports at simplepassivecashflow.com/investor letter. But let's get going here. We always start off with a little bit of a free Easter egg giveaway, and this month we've actually got two of them. So I created a simplified version of the Miracle Morning for real estate investors, which you guys can go and it's a quick PDF download. Change your mornings and achieve your goals. It's a quick read. To get this, email me at lane@simplepassivecashflow.com. And also, you guys can get a downloadable return on equity tracker. So this is what I talk about a lot as one of the most common mistakes real estate investors make, where they buy and they never sell. Well, I'm not saying you should sell, but you definitely should be either doing a refinance or a HELOC, at least to be pruning that equity off. Because if you've seen it with turnkey rentals, you can make 30% pretty easily in your first year, but that eventually tails off as your property gets more and more paid off. Your property appreciates. The money you make sort of stays the same. Rents typically increase a little bit, but they generally stay the same. But the deployable equity, the denominator of the question of the equation, greatly increases. So this makes your return on equity goes down. Sophisticated investors always re-leverage their equity so to keep this return on equity high. Of course, let's not be a bonehead. We have to look at our cash flow levels. But this spreadsheet allows you to figure out where is your lazy equity. You can go and get it at simplepassivecashflow.com/ROE. So here we are. If you guys want to join our community, go to our Facebook group and you can check us out on, I do these slides in the YouTube channel. And also this is recorded for podcast form. It's Simple Passive Cashflow podcast. Been doing it since 2016. So first, starting off with a little bit of a teaching point this month is people have been looking at refinancing a lot lately. All-time lows. And people are always asking, should I get a refinance? But we'll always remember, like, the lenders are always pushing you to get a refinance, and it may not make sense for you. They may call it a no-fee refinance, but all they're doing is they're increasing the rate a little bit to kind of hide those fees. So astute investors know that you need to take into account your rate and fee and see if it makes sense. There's always a crossover point. You need to figure out what that crossover point is. But here's on the screen, here's some rules of thumb on a 6%, 5% mortgage and what the payment will be, how much you will save. Use that return on equity spreadsheet a lot to figure out, maybe you might want to just dump the asset and sell it and buy 2 to 10 more houses or 3 more syndication deals, creating a lot more, maybe 3 times your cash flow at that point. Certainly multiplying your return on equity. Now we're going to get into the monthly report this month. Some general thoughts on the economy, some takeaways here this past month. Encouraging signs of GDP growth. You're seeing some splurge spending, which is pent-up demand. This is what I think is going to be happening in 2021. I'm generally pretty bullish. I think people who have got good jobs are looking to spend some money next year, get the heck out of their house. Of course, a lot of people are struggling, but it's unfortunate, right? Like you either have the haves or have-nots kind of a situation here. And the pandemic definitely progressed that forward. And different asset classes getting impacted very, very differently. And we'll go into this report. We'll also have, I'm going to be doing a little bit of a breakdown for different asset classes like office space, mobile home parks, retail, multifamily, of course. And, we're talking about the real estate sector, and you have different asset classes. And within each of those sub asset classes, sub-asset classes where you're talking about different types of office or different types of areas, different types of A class, B class, and you can break it down from there. So a lot of news articles, they are very broad, right? Because most people don't dig into this stuff. But my hope is to educate you guys to a point where you can kind of Let's read between the lines and just know the nuances. At the very least, we're not just gonna read the headline, right? I'm gonna always getting into a point of reading the whole article and picking out the one line in that article that's really important that maybe may or may not align with the headline, the clickbait. One of the quotes that came out of the ITI report that I refer to a lot is, if you wait for the macro economy to enter a full-fledged recovery, you will fall behind the curve. And the ITI report is a paid report that I pay for, and it is one of those that I think is a great resource if you guys are looking to get away from the mainstream media, which I think is a lot of garbage. That's something to go and subscribe to. Also, the Richard Duncan is another great resource. You guys can learn more about that one at SimplePassiveCashflow.com/Duncan. But a bunch of threats to watch, like the onset of the flu season, month-to-month momentum in total retail sales, what's the Fed's doing, oil prices, and something I've always watched is U.S. intermodal rail traffic, because I worked for one of the 4 major railroads for about 7 years. They are definitely a leading indicator in what goods and services, like what goods are being moved on the rails, especially the raw materials like the lumber. They're a precursor to when the raw materials need to move first before it gets put into service several months later. So there's some jitters there in the first half of September, uncertainty regarding unemployment benefits as the next stimulus fund is working its way through the system. But there's always going to be risks, right? How else do you get people to watch news? If there were no risks, nobody would ever watch news, and you wouldn't have any advertisers on there. But from my syndicator point of view, talking to some of my peers, you hear a lot of rumblings about stimulus burning off. I would say we're not too concerned about that, especially if you're in a good stable market, certainly away from the blue states. We were much more worried about the April-May 2020 collections, the first stage of the COVID coming out, how that was gonna happen. Pulling up the Yardi matrix, one of great data sources out there. In their August 2020 report, they showed that multifamily rents increased by $1 in August. However, year-over-year basis, national rates declined by 0.3%. And whenever you read this, you got to take it with a grain of salt, right? Like, they're combining markets that I would never invest in. Well, I'm not going to say never, but markets like San Francisco, Seattle, New York. The lifestyle asset class continues to be hit the hardest, and lifestyle asset class is the luxury stuff. Again, stuff we don't invest in. We invest in what they call renter by necessity. So that is, as the name implies, you're renting because you need to, because you can't afford anything else. So that's what we like to invest in, to provide good quality housing for those folks. So they held up well since the beginning of the pandemic, since the Yardi report, with only 8 of the top 30 markets experienced negative rent growth in August. And also the Bay Area is dying. I think a lot of people are running over to the Sacramento part of the Bay. So you're seeing some uptick in prices there. But yeah, people have finally got that great second reason to get the heck out of the overpriced city of San Francisco and the Bay Area. Again, the first was just generally it was too expensive, but now with close quarters and a lot of social events not happening, it doesn't make any sense. Why stay? And why a lot of the tech employers there are allowing their employees to go to sometimes even the next summer to work remotely. Now, I will caveat saying that not all office is out of business. You can look at a lot of the places that aren't tech hubs where you can remote work. You're seeing that a lot of those demands kind of staying strong, and I think all of us agree is when maybe not us listening, but definitely amongst our peers, there's varying levels of productivity. I think generally we would say that, yeah, the office is not going away. But let's start at the top, multifamily, since that's usually the feeder that everybody starts out with a single family home. So they typically move to multifamily. Not saying multifamily is the best asset class, but it is a great starting point, and that is where we will begin. Business Now reports that Class B assets are the sweet spot in multifamily right now, and they are citing the showcase in resiliency during an economic downturn. RE Business Online reports from Marcus and Millichap that multifamily fundamentals regress as government assisted waves. It's kind of a gloomish type of headline article, but hey, I actually read the thing here and I pulled out this where they're saying July 2020 available supply dropped to the lowest point since 1982, meaning not everyone wanted to make the leap into home ownership can do so. So a lot of people, with the rates low, we did see a lot of in our more higher end apartments, people opting to go and buy a place to live in and moved out. So we had a little bit of turnover for that. Obviously, that's not happening in the B class and the C class type of stuff, more in the B class, A minus type of stuff. But getting back to the article, for this reason, Marcus and Millichap believes Class A garden style suburban rentals with larger square footage and ample outdoor space will benefit in the future. RE Business also reports that U.S. economy adds 1.4 million jobs in August, and now unemployment rates return to single digits. So I think we had like negative, it was just a bloodbath in March and April, which made sense because we shut down the country. But it does seem like we are coming back. Unemployment rate dropped from 10%, 10.2% to 8% last month. Commercial property executive reports, and now we're starting to go into some different asset classes, right? So you can see how things are recovering amongst different asset classes. And you as an investor, takes this into account. I take the standpoint of I'd like to be diversified in all asset classes for at least being able to learn and to know what deals to go into, so that when the world eventually changes every 3 years, we kind of move from one asset class to another. So Blackstone, which is that big fund out there, and which I call smart money, they just bought almost $500 million of mobile home park assets. So they're a buyer of mobile home parks. Probably because mobile home parks, if you've ever been to one, they're not trailer parks, right? These are pretty nice places to live. They're cheaper. And they are good for people who enjoy their space, right? So they're very pandemic friendly. Dallas developer from the Business Journal reports that the pandemic has slowed demand for luxury high-rise apartments. Most of us will say, yeah, no duh. Commercial property executive, now we're talking about office space here, recreating the office for an foreseeable future. So talking about some trends that you're seeing in office. I think a lot of us, especially it seems like a big part of my community lives in the West Coast, and we're predominantly seeing what's happening in San Francisco, Seattle. You just got to remember that those are predominantly tech type of industry that are using that office, which is not the case in the rest of the country. So, some office space needs to be decreased. They say in this article, but some firms are, and I quote, twice as much space for social distancing is being used. So a firm will double down. There's, maybe somebody went out of business, not using a space, so they are acquiring more space that they can adequately equip their employees with the space needed to socially distance. I would say a lot of other places other than tech hubs are realizing that their employees are pretty useless when they stay at home and they play with their cat all day long while they're supposed to be doing work. Definitely talking to another recent investor brought up another point that you don't have that mentorship. You don't have that transmission of knowledge from senior employees down to junior employees. I mean, just imagine if you were coming out of college and your first day at the job was, back at your house. That ain't good at all. I think this whole trend is pretty temporary. But I also have the 5. Where are they building stuff, right? So Manhattan, Chicago, Boston, Los Angeles, Washington, D.C. is where the new inventory is happening. Here are where we call them Zoom communities because of the reliance on Zoom or just working from home. Starting at the top, San Jose, San Francisco, Los Angeles, San Diego, Denver, Salt Lake, Seattle, Portland, Sacramento, all those are West Coast tech hub cities. And not until we get to the 8th or 9th position do we see Boston, Austin, Washington, D.C., New York, Phoenix, Minneapolis, St. Paul. So what we're seeing in those are the top areas where most people are telecommuting. Again, you don't, a lot of tech hubs again, just pointing that out. Multi-housing news reports American Landmark Denzer begins Orlando developments. Now we're talking about hotel stuff, like tourism type of stuff. So I don't know too much about hotels and leisure and like the high-end stuff like that. I know that it does really well in good times. People were flying high with their short-term rentals, but depending where you are, you could be shut down. Another article with Blackstone, right? The smart money guys. So Wall Street Journal reports that Blackstone is ready to lend after raising record property debt fund. So they are ready to get after it, which shows, the smart money is acquiring. I mean, Blackstone, they just bought that $500 million of mobile home parks. Now they're loading up to be going after more properties. Yeah, I mean, it's funny, right? Why is the smart money doing this? But why is everybody having the same line of, oh, I want to see a vaccine first, or I'm uncertain, or I want to see who wins the election. Just making the observation. Commercial property executive reports that mall giant strikes a $80 million deal for JCPenney. The Simon Group, the mall is buying JCPenney. And most of us know that JCPenney isn't the cleanest place to shop. And I'm not a big fan of commercial retail storefront type of stuff, or certainly not malls. I think that they are slowly going away. I don't think e-commerce is here to take them out in the next 5 years, but I think it's a lowering trend. Just like how I don't think people are going to use ATMs anymore. I just generally don't agree with that, that kind of usage. But I like this article was cool because it's like, people make money. Real investors invest when there's blood in the streets. And who would have thought buying a JCPenney, right? But I hope Simon does really good with it, right? I mean, people talk a lot about like, all these guys not paying taxes. Well, they're the guys who invested the year or two before when they put in extra funds to be able to deduct in the next tax year, right? They kind of deserve the tax funds because they're the ones putting the reinvestment when most of the country are just sitting around waiting. A couple articles here on a couple asset classes we don't talk about too much. Senior housing. REITs take stock amongst amid turbulence. Things aren't going too well in senior housing, maybe because if you have a senior housing, you're probably stricken with operational costs, having to wash things every 50 seconds or I don't know, whatever, right? I mean, there's just more operational costs. And people ask me all the time what I think about assisted living. I think it's great. Silver wave is coming, but it's not a real estate investment. It's a business. It's no different than investing in a Burger King or some other franchise. I kind of stay out of that type of stuff, operational businesses. Preferred apartment communities exit student housing market. So you have a big REIT trying to unload some of their apartment communities for student housing. And again, student housing, I never liked it. I just never really liked catering to one little cohort such as students. I prefer to go after workforce housing because that's the largest competition. So the message here is to stick to the basics. And the last asset class I'm kind of talking about today is if you've been watching like a lot of TV, maybe you've been seeing the new Dave & Buster's commercial, which I think is probably my pick of the year for best advertisements on TV. But they have this like Asian girl who is a really good actor. She portrays herself as having a very low self-esteem. So she does that Dance Dance Revolution game. And every time she does a great step, she's like, it goes like perfect, perfect. Which makes you kind of want to go to Dave & Buster's and play around and play some video games. But apparently they're spending all that money on advertising to get me to do that because Dave & Buster's reports 85% drop in quarterly revenue flirts with bankruptcy. So I don't know, maybe the advertisements is just last ditch effort. Or maybe it's just a really good commercial and it got my attention. So for those of you guys watching on the YouTube channel, I have a 3D map from howmuch.net of the US cities with the highest economic output. And it's kind of a cool 3D map with a bunch of cones, and each cone represents how much money is being generated there. And of course, New York, Boston are kind of the financial centers, but some of the surprising ones, well, Chicago's there too, Los Angeles is there too. I think surprisingly is San Francisco is really not that big. It's only half of 549 billion, where Los Angeles is $1 trillion. Houston is $500 million, and Dallas is $500 million, which is equivalent of San Francisco. Not saying that these are the places you want to invest, but sometimes you just have to look where the money is going. If Housing Wire reports that the Fed expects low rates through the year 2023, and I think we've seen pretty much rock bottom rates for the last almost like 5-6 months now. So they released a statement Wednesday where all 17 members of the FOMAC, which stands for the Federal Open Market Committee, they said that they expect to keep the central bank's benchmark rate near zero at least to next year, and 13 estimated it would stay there through 2023. A little bit of a pop culture here. So T.I., the rapper, I think he went to jail for a little bit a few years back, but now he's back out. And he's urging people to ditch the Cartier watches and Louis Vuitton swag to buy property instead. Now, I don't know if he's talking about like real estate for rentals or just buying it, but he's saying actually, he has a kind of a cool voice, so I'm going to tell it in my T.I. voice. We were just in a studio having a discussion. I just felt the need to, actually, that's not very good. So it says that it's just need to share it. He says in the clip, all y'all getting that money from the government ain't no more Cartiers and ain't no Louis Vuittons. You got to get some property, please. Please, y'all, go get some property. So listen to T.I., get some property, lower interest rates. If you guys are looking for your first rental property, turnkey rental, remote rentals, we got the group for that. That's the Remote Investor Incubator. And you can also check out the eCourse if you just want to study alone, I guess. SimplePassiveCashflow.com/incubator. And if you guys are more of a credit investor, want to build your network with other accredited investors to stay close to the in crowd, to know who to work with, what to do, how do you do your taxes, go to SimplePassiveCashflow.com/journey and apply for our group there. This is the part where I go over my little personal updates this past month, and I'm always trying to improve myself. And the first one is growth. So I found this little article here that I tried to apply this month. It's from an episode or Love It or Leave It. First tip here is being passionate towards yourself. It's okay to not be okay. And I think I put this in here because with the whole pandemic, there's a lot of people out there having a hard time, especially the extroverts, right? They want to be out there meeting people, shaking hands, hugging people. Maybe the introvert out there are happy clans. Maybe they're not, you never know. But yeah, just being more compassionate towards one another. Tip number 2, develop a routine. Engage with certain anchor points or actions throughout the day to help ground you. Sometimes it's, I make myself go crazy. I feel like every day is the same. I get up, check my email, I do the same thing. I like routine though. Number 3, consume media that helps you detach from reality. Take a break from what is overwhelming you. It's okay to distract yourself. I think unfortunately people do this a little bit too much. I think this one is assuming that this is a minority part of your day. Number 4, solve problems in your everyday life. Doing this can help with small barriers that can add up and increase the feeling of overwhelm. So what I personally do is, once a week, I kind of take inventory of my bigger projects that I have. And likely it's probably been on my list for 2 or 3 weeks at that point. And I try and break it down into a little step. So try that out, see how that works. Number 5, be grateful for the things that you have. It can lift your spirits and the spirits of those who receive gratitude. And gratitude, if you Google that term and you look for all these articles on it, it is definitely one of those hacks out there, or it can just change your mood and outlook instantaneously. Share how you are struggling. So everyone is struggling in some way or another. Suffering is universal, and reach out to other people and maybe they can empathize with you. Or maybe you might find somebody who's struggling even more and you can help them. I think you guys aren't alone. That's how we stress community in our group. And yeah, I'm a little wary of saying, yeah, if you need something, let me know. But yeah, reach out to your circle of friends, right? I mean, and I think reach out to people in your circle, see if anything is going wrong, and just prod and poke a little bit. So my way I got contribution, we have over 350 investors in the investor club, and hopefully I feel like they are all on the road to financial freedom. Investing in real assets where they know the people they're working with and not getting screwed over by retail investments that ultimately just make Wall Street rich. How am I going to get after significance this month? Well, I've been trying to be like Simon Properties and trying to be a little bit of a contrarian investor. I'm not buying JCPenney. I wouldn't do that personally. But I am looking to invest in things that are definitely, I think if people hear about it, they definitely are going to have a knee-jerk reaction. For those who are closer to me in my community, certainly in my mastermind group, reach out. I shall explain. So big things come in ahead. A little bit of uncertainty. How did I get a little bit of spice in my life? Well, I joined a second mastermind, currently in a real estate mastermind called the Collective Genius, where I kind of rub shoulders with a lot of high-performing real estate investors and operators. But I've joined a second mastermind that is more of an entrepreneurial. It's a digital online mastermind. A lot of high performers, really cool. I actually got a lot of good ideas to have my next mastermind, which we are looking to have it in January. I'm still on the fence a little bit if we're going to have it with all that is happening in Hawaii and how people are generally a little bit conservative out here, and we are a little bit behind the rest of the US mainland in terms of corona cases. But I got a lot of really original ideas and creative ways to use that Zoom platform. It takes a little bit of planning, but I kind of think I can make a better event virtually than online. How did I get a little bit more certainty in my life? Well, during that mastermind, we had Derek Sivers gave the keynote, and one quote that came out of it was scarcity comes clarity. So I think a lot of people suffer from abundance of choices. And maybe I did that in the last 30 minutes where I overwhelmed you with multifamily, assisted living, Dave and Buster's, office, retail. I know I'm missing some, but yes, so many choices to invest in. This is very synonymous with Malcolm Gladwell's the book, The Paradox of Choice. The more choices you have, the more unhappy you are. When things are simple, you feel like you've made the right choice, and whether you make the right choice or not, you're happier. So I think in terms of investing, just try and find in deals that cash flow, that are in good areas. That's my thesis these days. And lock it up with good debt that will be your friend when inflation ultimately comes. But I just try and keep things simple and look at one thing at a time. A lot of investors get overloaded with choices. Pick one and go deep. Don't be one of those investors that just kind of looks at MSA data, or, oh yeah, in industrial properties are good, or office space is bad, or multifamily is good. You got to dig a little bit deep. And I think the only way to do that is to grow your network around you. I was just talking with a bunch of family offices today. It's amazing how differently they think than the average person. It's not like they're smarter. It's just they're more connected, and they just are around, and just their circle of people is so much more different. How did I get a little bit loving connection this month? Well, I didn't. I made a stride in that direction, and I bought myself a pool table, because pool table is the watering hole of people. People like to gather around the pool table. So if I get it, hopefully people will come and play pool with me and hang out and be my friend. So new podcasts and articles that we released this month. We had George with AHP talking about pre-REO. We had Russell Gray talking about how to hedge against the recession, talked about how inflation is coming. I had a few short videos on, do I use a 15-year mortgage or a 30-year mortgage? Those are all in the YouTube channel. We brought David Bridzel to talk about cost segregation. It's a nice little hack there, but possibly doing that with your home you live in, moving out and moving back in. Talk to your CPA on that one, but yeah, getting creative there. I like it. I found this neat little card, the X1 credit card, that's supposed to give you 4x reward points. And how to live a fulfilling life, a little bit more woo-woo type of podcast. But yeah, try and sprinkle those in every once in a while. If you guys are looking for more, got a good topic for the podcast, let me know. Some resistance and barriers and noise ask for you guys to help me out. I've been frustrated. I can't travel. I was used to going at least 6 trips a year, maybe 7 or 8 trips a year, at least 6 for like business to check out properties. But this year I'm grounded. But by the time you guys probably listen to this, I will be making a trip up to Cleveland and Houston. Hopefully I can meet a lot of you guys there. Doodads, I put this in here because if you're gonna buy something, damn it, call it a doodad. Call it a waste of money. And the thing I bought this month was a very expensive Frubling's slow juicer, and this thing is pretty cool. You can put like big carrots and whatever into it, it just juices the heck out of it. I was spending I think like 40-50 bucks a month on those pre-made juices. So I was spending a lot of money on that. So I figured I would just do it myself. And it's actually pretty fun. I don't know, it's kind of like an adult coloring book, Zen type of activity to make juice. And then, health is wealth, right? So I figure it's a good investment. And then also kind of getting into more gardening these days. So I have like a worm farm. So this is like a pump where you put like the worm droppings into a bucket, and then you aerate it. And then it becomes like the world's best organic fertilizer. This thing is a little object that you stick like bottles in, and then you can go on a trip and your plants won't die because you didn't water it. But I like gardening. Yeah, so just wrapping up here, just a reminder that the Easter egg, go and grab it. It's the miracle morning for real estate investors. Email me at lane@simplepassivecashflow.com. And also don't forget the return on equity tracker, simplepassivecashflow.com/ROE. You guys can get access to this and more at simplepassivecashflow.com/club. Those are our club members. And remember, not giving any tax legal advice here. And we'll see you guys next time. Bye.